Today is Wednesday, December 21st. It is the winter solstice, so the good news is the days are going to start getting longer for us up here in the north. Let's look at the Dow, the big story, Dow 20,000. I'm yawning at Dow 20,000. It's really just a meaningless type of number. Yeah, everyone says psychological, blah, 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 but I don't buy these psychological levels. They don't mean anything on the charts. No reason why someone's going to buy or sell, and you see that, was 19,000 here a psychological level, was 18,000, up and down, up and down. Actually, I would draw a support level or support and resistance level in that general area. So this is why I would say that that round number might have meant something. But let's take a look at the Dow and why 20,000 to me is really not a big deal. Here is the level itself. Dow 20,000, you could see it got close, but the market's been in a congestion zone for the last couple of days. So is it finding resistance at this level and creating something significant out of it? I think that's possibly the case. This is the horse before the cart rather than the other way around, where 20,000 means something. I think that the action has showed that this level is starting to mean something. But I still think that 21,000 is the number to watch here. Let's take a look at why. First, I'm going to take this out to a longer term view. Okay, and this is the weekly view. You can see, no surprises there. There's your bull market from the 2009 low. And now let's put these levels back in. All right, there's that level just above 18,000. It doesn't have to be precise. You have a breakout, sort of a failure heading into the election, and then of course you know what happened from there. I think that's kind of an interesting level to watch. And now I'm going to do is just drop a level, drop an arrow from the bottom of that pattern, and you can see that it's arguably, very arguably, an inverse double head and shoulders pattern, double-headed head and shoulders pattern I should say. Arguably, it's really not textbook by any means. I'm going to take this arrow and just bring it up to the breakout area. And that would be an upside objective. And lo and behold, pretty close to 21,000. I don't think 21,000 itself is the magic number. It's that area, based on the chart pattern of this almost 2-year congestion zone, gave that as an upside target. All right, let's keep going. See if there's anything else here that could help us determine what is a good level. And now I'm just going to draw the trend line. Nothing mysterious here. And I don't know, should I draw it there? That's kind of a better line to me. Doesn't really matter because it's small change in the big picture. Now I'm going to take this parallel line. See that obviously this is a very fast pace. This is not sustainable, but maybe in the next couple of months, maybe it does something like this, and that is definitely plausible in terms of getting up to 21,000. All right, again, conjecture, but it makes sense. It's got a good framework. Now I'm going to shift to the very long-term picture. Look at the monthly chart. And this doesn't give us much to go on. However, we switch to the S&P 500. It's a different story. Just eyeballing, that kind of makes sense to me. Maybe that's an overly excited decline after the financial crisis. Let's do the same sort of thing on the S&P. So do the same sort of thing and take this arrow, grab it, and project it up from the breakout. We'll draw a line in there and see where it goes. Kind of looks like the same sort of distance that the Dow has to go to 21,000. And what I did was I actually took the current ratio of the Dow to the S&P. And because it's really not that far in the future, I mean the ratio does change over time, but it's not that far away, a similar ratio of Dow 21,000 actually gives us the price level right in around here, 23.27. I mean, this is just rough drawing, 23.20, 23.30. That type of area is the target on the S&P, and the ratio to the Dow makes sense. So that's how I get my target of 21,000 on the Dow. Of course, it's not going to be a straight line. Things are pretty overbought right now, and a lot of sentiment indicators starting to tip towards contrarian bearish, like the Ridex Bear Fund assets are quite low. Anyway, there you have it. Just a framework for the market, and take it from there.